and welcome to this week's edition of Energy Updates News powered by Pinnock. This week you can't have failed to notice events in Libya. Although the crisis is predominantly political and humanitarian, it is also having an effect on energy concerns in the West. To discuss the effect this is having on the wider economy, I'm joined by Pinnock analyst Emma Pinnock. Emma, can you talk us through the current situation?
The recent political turbulence in Libya and many of the Middle Eastern countries has pushed oil above $100 a barrel, and it's currently trading around $115 a barrel.
Okay, so that's in oil. What effects that's having throughout the sector?
Well, since it broke through the $100 a barrel mark on the 31st of January, we've seen wholesale winter 11 gas prices increase by over 14%.
Okay, is this the link between oil and gas then we're seeing?
Yes, around 75% of European gas contracts are closely linked to oil still. So their future gas prices have risen steeply, and because of this we may expect to see higher exports to the continent as they try to replace contract gas with cheaper UK gas exports.
Okay, so that's obviously the effect in Europe. Why is it that going on in Libya are affecting Europe so much?
Well, Libya is one of the major oil producers in OPEC, which is the Organisation of Petroleum Exporting Countries. Globally it produces only 2%, which is relatively small when you compare it to Saudi Arabia, for example, who produce about 12%. But because of its proximity to Europe, most of the oil exports do come to UK and Europe, and we've already seen supply disruptions because of this political turbulence.
So Emma, that's the effect it's having in Europe. Can you tell us the effect it's having on the global economy?
Well, across the stock markets we've seen them falter as many believe that this high oil price, if sustained, could really affect global economic recovery. We've also seen that investment in gold, which is usually seen as a safe haven, has increased. We've reached record highs of $1,440 an ounce. That's up 6% from February. And finally, US investment bank Merrill Lynch came out and said that this 10% rise in prices, if sustained, could lead to a 0.5% decrease in oil demand.
Okay, so do we think the price is going to continue at above $100 a barrel? And if it does, what effect is that going to have?
It is likely in the short term at least that it's going to remain at $100 a barrel. The IEA, which is the International Energy Agency, have said that the age of cheap oil is over. I think many people were expecting the price of oil to rise, perhaps not as steeply as it has, but it will remain above $100 and that will have an impact on our supply and demand.
Okay, so is there any way that the UK can mitigate this risk? Are we going to become more reliant on things like LNG, do you think?
Most definitely. With high exports to the continent, the UK will be very dependent on our own continental shelf supplies and cargoes of LNG, liquefied natural gas, arriving from Qatar and other countries. And we'll also be dependent on Norwegian supplies, which were quite inconsistent last summer.
Thanks, Emma. That's actually all we have time for this week. Join us next week for more insight into the energy sector. Also, don't forget to look out for the Pinnock budget special on the 24th of March to hear our experts' opinion on the budget's announcements.